Welcome back to Bitcoin Treasuries. I'm Tim Kotzman here with Joe. Joe, Happy New Year. How's your day going?
Oh, it's going great. It's a pleasure to be on, and I'm so excited. Obviously, we're in a position here in the markets where we've got a lot to talk about early on in 2025 after an absolutely thrilling 2024. So, looking forward to this conversation.
Absolutely. Do you want to start with the long bond and what you're seeing there today?
Yeah, the most interesting subject. Just let's throw it over to me. The
Yeah.
long bond. Everybody wants to hear my rambling thoughts on this. No, I was just saying. I was interested in. I was engaged in depositions for most of the morning because I am a practicing litigator. Uh, so like I can't always watch the market. So when I wandered over my trading view this afternoon before I jumped on here, obviously I see a lot of red on the screen, but one thing I see is green is the long bond, the 30-year Treasury bond. It is selling off, and it has risen 7 basis points today to 4.91. And just for context, that is the highest yield we've had on the 30-year since October of 23. It was only up there at this level or higher for a handful of days in late 2023, October 2023, and we could be on the verge of knocking on the door to new lows in the 30-year in the Treasury and busting above that 510 level, which is going to be significant. That's going to be market moving if we make a new cycle highs in the yield for the long bond. So definitely something to watch.
What's your take on where we are in Q1 2025 insofar as A, whatever you want to talk about, but B, the Fed has been cutting rates, but inflation's kind of sort of creeping back up. And then you have Trump coming out today saying that interest rates are way too high. I mean, how does all this play out potentially?
Yeah. So it's interesting, right? Typically, when the Fed starts cutting at the front end, cutting at the overnight rate, you tend to see a corresponding move down at the longer end, right? We're seeing the opposite here. There's a couple of reasons for that may be triggering this. And I'll give you all of them, and I'll tell you what my view is at the end. Okay. So, as quickly as I can, there's been this repeated sort of what I call it sort of games with the issuance, right? So Bitcoiners who are going to listen to this podcast and astute market commentators will understand the basic laws of supply and demand. So much the first thing you learn in small economics. And with supply and demand, right, there have been a lot of issuance by the Treasury at the front end of the curve, right? So let's say 5 year, shorter than 5 year duration. That's the bulk of the issuance. We haven't had a lot of long term paper come to market in supply catalysts. So it might be the sense that the new administration is finally willing to depart from Janet Yellen's modus operandi, which was to issue a lot of short-term paper, and the market is sniffing that out. They're sensing that this new Treasury Secretary coming in is going to return to the historical norm, going to issue longer amounts of long dated paper, which that supply has to be absorbed. And people think they're one for one, like holding a long bond on a balance sheet is the same as holding short term treasuries, and they couldn't be further apart from the reality. Reality is when you hold long term paper, it takes a lot more balance sheet capacity. So because of that, because of the increased balance sheet capacity, you might be seeing this reaction at the long end. The other idea that could be in the marketplace is just the U.S. economy is stronger and more robust than people thought. People were thinking that there was going to be, for most of 2023 and parts of 2024, this big sort of deleveraging event, an economic recession, the yield curve uninverting somehow spell doom for the U.S. economy. So because of that, I think some people were defensively positioned. They were hiding out in long bonds and hiding out in bonds in general. There's some record data that showed investors were buying significant amounts of fixed income last year. So I think that might be some of it. People finally unwinding some of those trades and having rates rise to where they perhaps should be, given the nominal economic growth. And I want to emphasize nominal as opposed to inflation adjusted real growth. But overall, I think that those two things are sort of the main camps of where things might be. You might have also a fear out there that is not my view, but there is a fear by some market commentators that we could be headed for another bout of inflation, that, because of all the government spending, because of perhaps tax cuts and other policies that are pushed through by the Trump administration. It's possible, of course, that we could have another reacceleration, which would result in the Fed having to walk back even the two cuts they planned for next year. I don't believe that personally. That's my bias, but I think it's always possible. So I'm trying to, be balanced here. But overall, I think one of those three things is driving the market, or maybe a combination of more than one.
How do you think a potential any version of the strategic reserve on a federal level would play into all of that? If you have a little bit of inflation creeping back up, but
Yeah.
they're like, look at the price of Bitcoin, just look at it. We're so successful. Like, how does all that kind of play together maybe?
Well, if you're a Bitcoiner, you have to be excited about the strategic reserve. And let me tell you why. Regardless of the nominal buying power that comes in, regardless of whether there's actually new Bitcoin purchased or it's barely Bitcoin over here that's reallocated to Bitcoin over here as a strategic reserve, all of that is immaterial in my mind. What matters for markets these days, almost more than anything else, are the narratives and the perception. The perception
Mhm.
of the markets, the perception of reality almost matters more than reality itself and fundamentals themselves. This is what always confounds the 2+2 analysts who look at something and say, how could that possibly trade at this multiple? How could it possibly trade at this price to earnings? It's because the narratives are really pushing the positioning because people get in front of it. And we live in this era where information travels and narratives dominate people's actions. It's really psychologically driven. So because of that, the psychological narrative, the signaling that will come from a Bitcoin strategic reserve, I think is going to be absolutely massive, regardless of the form that it takes. If the US government is saying either implicitly or explicitly that we need to hold this asset for strategic purposes, the message that sends to the rest of the world could not be more overstated. It is telling everybody that this is an asset that you need to hold, right? Because if the United States government, the only remaining global hegemon, is saying that we believe that this asset is important enough to identify it as a strategic priority, then why are you, leader of country XYZ, why aren't you also doing so? And everybody has to consider and analyze those questions. So for me, I think it's one of those things where you cannot price it. And I had a tweet the other day that I still talk to a lot of, well-off individuals, people higher income, and they still have this narrative out there that, oh, the government's just going to come in and ban Bitcoin, which I think will be killed once and for all if we can openly say to these folks, the government, not only are they not killing Bitcoin, they're holding it purposely for strategic purposes. So that is just going to fall by the wayside. And I don't think that's in any way priced into markets. Now, the super bullish catalyst, okay, which we can talk about, and I'm less optimistic about, but you should put it on the table as an option, Tim, is the idea that maybe they don't just hold Bitcoin and transfer it that was, taken from victims or taken, seized from criminals. Maybe what they do is they actually go into the marketplace and seek to acquire Bitcoin. If that is the case, if that is done, I think that opens up price discovery to a much bigger level. I think it completely kills the quote unquote cycle. If you still believe in cycles, when you have a sovereign state openly trying to acquire Bitcoin, all your models are broken. So in my view, like that's sort of the range. I think all of it's bullish, of course. All of it is still underestimated by the marketplace. I think there is some sentiment out there that people think that, well, yeah, Trump says this, but Trump says a lot of things. So let's see if he actually does it. When he signs that executive order, when he takes any first step towards doing this, once he takes office, I just believe the market is going to react incredibly favorably to it.
Hey guys, this episode is brought to you by OnRamp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. Where do you think the negative sentiment, I'm just, no one specifically, but just overall, several voices at least several voices just being very negative on whether or not a strategic reserve will be put in place. And it just seems to me, and maybe I'm biased because I'm optimistic by nature and I own Bitcoin, but it seems like every indication is that we'll get some version of it. And if not, you'll have, 6, 12, 20, 500 states adopting it on the state level.
Yeah, I think the negative reaction to it comes primarily from two groups of people. There's the TradFi people who are always negative, right? They're always negative on anything with Bitcoin because they don't understand the asset. They haven't taken the time to analyze it properly, and they have this idea that the only way an asset can have value is if it has some sort of cash flow, right? That assets have to have cash flow for them to justify long-term investments. I disagree with that, but a lot of those guys, they hate gold anyway. They hate anything that doesn't have some sort of balance sheet statement, which is ironic because they invest in a lot of companies that aren't cash flow positive anyway. They don't make any money. They're just debt zombies wandering around. Particularly companies in the Russell 2000. So that group, like, I'm not as persuaded by. Then you've got the Nick Carters of the world. You've got the people that are anti-Bitcoin strategic reserve. I think for more pure reasons, more Bitcoin based reasons. Those folks, I really think that they. From my perspective, I think that they're missing some of the aspects of Bitcoin in terms of why price discovery at this end, why the store of value component, rather, why the store of value is essential to being established before Bitcoin can do other things, before Bitcoin can be a valid medium of exchange, before it can be anything that we want it to be as the base layer for global reserve assets, for banking institutions, for all these variety of different potentials that we see Bitcoin filling a need for. You have to get through the store of value phase, and the store of value is, I'm sorry, it is not achieved at $2 trillion. Okay, that is still smaller than some individual companies. It needs to get 10, 20, 30, 40 trillion dollars, that liquid, that deep, that prolific of a marketplace to truly be able to fill the gap that I think we need for it to be an alternative to sovereign debt. So to me, I think they continue to have this idea in this head, this puritanical idea of Bitcoin. Same thing we had with the ETF people, the people that just got violently upset about ETFs, or the people that are upset about MicroStrategy hodling Bitcoin. People come to Bitcoin in different places in the Bitcoin arc. And I think where they came to Bitcoin sometimes colors their judgment of what Bitcoin should be, myself included. So I feel like we have to sort of separate ourselves from where we think what we think Bitcoin should do, and what we know Bitcoin can do, which is it can be purchased by anyone. It can be purchased by governments. It can be purchased by banks. There was really, the only limitations are those that were set forth in the actual Bitcoin core protocol.
What's your take on, I believe it would be the Treasury creating Bitcoin bonds and kind of taking those to the market in order to buy Bitcoin? Does that even make sense? Or
first of all, I looked carefully at this issue, and I do not believe it would be legal without an act of Congress.
Okay.
Congress is going to require, I think, and to be honest, just overall, I'll tell you my bias. I am pessimistic that you get a whole lot done with this particular Congress. I think you may have a chance at two pieces of, I think, quote unquote, crypto legislation. I think you may have a shot at a stablecoin bill, because there are a lot of high profile interests rather, that are trying to push that across the finish line, and potentially some sort of market structure bill. I don't think there's the capital nor the sort of appetite right now on the Hill to try to go after a third thing, which would be some sort of Bitcoin borrowing. I also think that there is potential that such a move would be perceived as some sort of concern about the treasury market in general, and then the dollar. That the government, is actually nervous about some aspect of dollar or treasury bond bidding, something to that effect. And I don't think they want to send that signal, particularly not this new incoming administration.
On your X profile, you have life is on the wire, the rest is just watching. Or the rest is just waiting, maybe watching too, but waiting. Can you unpack that a little bit? Or
it's a quote from one of my favorite movies, which is Rounders. I don't know if you ever seen that movie, but there are these moments where you are in life in general, and I don't care what your discipline is, what your field is, you have the ability to, I think, execute, to deliver. It's a volatile moment, right? Being on the wire, it's a moment where you're tested, where you have to lock in and concentrate and focus on achieving a goal, and it's a moment you train for, right? I'm not a big believer. I don't care what your discipline is. I don't care if it's investing. I don't care if it's practicing law. I don't care if it's being a writer. If you're writing a good book, as I'm working on a book myself, I'm working on it for well over a year and a half now, coming up on editing and re-editing and rewriting, and the wire will be when I actually release it, like when I will actually put it into the marketplace, and I'll see what happens, right? If I execute it. But when you're waiting to be on the wire, when you're locking in, you're trying to prepare, when you're trying to get ready for something important, that's where you're alive, right? That's where you feel what it's truly like. The hairs in the back of your neck stand up. I'm a poker player, so like I love the thrill of when you're going there and making that last call. Do I call or fold? Do I raise the bet? Do I simply just limp? Those sorts of things, like that's when I feel alive. I love those moments. And when you're waiting, like when you're before those periods, when you're just trying to figure out, what do I do to get in that position, to have the benefit, to have the pleasure of that true moment. To me, like that's kind of the boring part, right? Like it's not fun, it's not glamorous, but it makes those moments on the wire truly impactful, and they're altogether meaningful. And I will just tell you, like there are guys I know. I'll talk to specifically traders. They will think and digest, and they'll work on a trade that they're going to execute, and they'll think about how to put it on for months before they actually put it on. And then when they're there in the midst of it and actually having to deal with the volatility, having to deal with the crisis of did I do it wrong? Did I get it over positioned? Is this really a good move? Those moments are difficult, and that's life. I mean, the life is brought about by challenge. I always say, like, you cannot truly have success without sacrifice. So from my standpoint, like if something's easy, if you're not truly put to the test, if you're not wavering on the wire, so to speak, it's really not meaningful.
And that might be a good segue into, I saw you also posted, it is not the mountain we conquer, but ourselves, Sir Edmund Hillary. So yeah. I just thought it might be interesting. Do you think it's education, optimism, both of those, or something else that leads to, or is the way that we conquer ourselves?
Yeah, it's a great question. And I want to thank you just for asking, because I've been on a lot of podcasts, and those two questions have never been asked. And I'm really happy to be able to talk about it in a nice professional setting like this. So the reason I love that quote, as someone who studies Stoic philosophy, is that there are very few things in this world you can truly control except your mindset. You might not even have full control over your body. You might be suffering from ailments, or however you were born, or a disability and so forth. But you can control your thought process. You can control how you react to things. You can control what you decide to take of a situation. And to me, whether it's my job professionally or whether it's my job, sort of as an analyst and talking about Bitcoin, or as an investor for my own funds and some friends and family, I always say that I'm not actually fighting against the other market participants. I'm not fighting against external forces. I'm fighting against myself to make sure that I don't fumble the ball, to make sure that I don't make a decision that makes me more vulnerable. And that's really the key. No matter what you do, things can go wrong, right? That's the reality. But what you can control is you can control your mindset, your allocations, your impressions of things. You can control yourself from overreacting. And if you master yourself, right? If you master your own internal thoughts and can control what you are processing, I think your chances of success go up way more. One of the interesting things that I run a lot, and when I was running a half marathon last year, it was tough. It was difficult and challenging. I was trying to go for a certain time, and I was getting near the finish line, and a gentleman came up beside me, and he must have seen me struggling and trying to get, I wanted to stop, right? You always have that idea when you get like 70, 80% of the way, like, let me just walk for a little bit. And he was picking me up and saying, no, you're going to run this whole thing. I'm going to run next to you. And what he told me is like, physically, your body can do this. He's like, I can tell you've trained hard enough to physically do this. But I think the mental aspect of this is what you're struggling with right now. You need to dig deep and figure out if you really want this so bad, if you want to hit this goal, That's the battle. The battle is with yourself, right? You are conquering yourself and your fears and your belief that you are somehow inadequate. Those sorts of ideas I think are essential for success in any field. And it's once you can do that in any capacity, okay, if you can do it where running, I think you can relate that to being a good investor. If you can do it while investing, I think you can relate it to being a good professional. I absolutely draw on some of my stick-to-itiveness and my ability to basically see it through in litigation. I draw on my experience from markets. Right? There are plenty of trials I've been in and arbitrations where I thought it was going terribly. Right? It did not seem right, and I wanted to just throw up the towel and say, this is just a loser. We need to settle this case. But I've gone the distance. I went through it. I stuck to it, what my original analysis was. I went back to my original beliefs, and I had a surprisingly great result come out for the client at the end of it. That ability, I think, is the secret to success in almost any field. And it doesn't mean you will always succeed, right? It doesn't mean that there aren't factors that come beyond your control. But to me, having the ability to conquer whatever those inner demons are is essential. It's an essential ingredient to any time I've ever seen someone be successful.
Do you want to dive into your Bitcoin journey?
Yeah.
I'm sure you've shared it before. I haven't picked up on it anywhere. So yeah, I would love to hear your journey to Bitcoin.
Absolutely. So my journey begins, as I think many have started out their Bitcoin journey as a skeptic. I really started and this is just the way my mind works, right? Like I always try to unpack things down to the most basic level, and I try to make arguments why something can or can't work, both for the positive and the negative, right? I'm perpetually trying to play devil's advocate for certain things, not because I necessarily am trying to be negative, but just because I want to know what the critics are going to say, where people are going to say it can't work. So in 2015, I had people looking at this asset. I had people, clients that were experimenting with it, court cases involving it. Some of the first court cases in Cook County, where I was lucky just through happenstance to have interacted with people, having to seize different assets and that sort of thing. So when I was involved in those cases, I reacted as most people would. This is just magic internet money, right? It doesn't work. It's no way this could ever be anything more than a digital pet rock. So I started trying to unpack it. And as someone came from both a philosophy background in undergrad and economics background, I tried to argue it both ways. Why philosophically it didn't make sense. Why economically it didn't make sense in our system. Why, everything I knew from traditional economics would say that this doesn't make sense as a money, and why it can never truly be a money in our system, which is a credit-based system. And when I kept trying to unpack it and tear it apart and analyze why it couldn't work, lo and behold, I kept hitting a wall where I found myself wondering, well, maybe I'm wrong. This actually could work, and here's why. And here's why it has attributes that, although they look very strange from the lens of the current system, if you shift things around, if you have a paradigm shift, this actually could make a whole lot of sense, because there's an inherent problem with our system, which is sovereign debt, which we can get to. But the issue I always found was that the more I tried to work against it and fight against it and argue for the sake of argument why it wouldn't work, I kept running up short. I kept feeling the lack of strength in those arguments. So when that happens enough to me, I finally say, okay, the balance of everything here tells me there might be something here. So then investing a little, studying it more, reading a little bit more, devoting myself to it in free time and listening to very smart people talk about it, and then trying my own arguments again to dismantle it, I still couldn't make any headway. So that was my Bitcoin journey. After I did that and kept, analyzing it and realizing that I couldn't unpack it and explain why it wouldn't work, I eventually sort of relented and said, well, maybe it can. Maybe this actually has something here. It requires a lot of creativity. I think even more than knowledge, you have to not only see where the world is today, but where the world could be, 20, 30, 40 years down the road. And that intellectual curiosity, I think, was critical in me coming to the determination that I think this actually is headed for to be the base layer money for the world.
Do you think the U.S. could put enough Bitcoin in a strategic reserve that we could ultimately pay off all of the national debt?
No, I don't think that's possible. Nor would I think that that is the route this is going to go. To me, first off, I never understood this notion out there among regular people, and I think it's mostly driven by like personal finances. But there's this concept that people think that the entirety of the United States debt needs to be repaid.
Mm.
I disagree with that just as a principle. I don't know where that comes from. I think it's just it's probably an intuitive comparison between personal finances and national economies. The reality is what needs to be done in the form of a government is a government needs to keep its debt to productivity, to its gross domestic product, debt to GDP levels in check. Okay. We can't get to a range where our debt far exceeds our productive capacity. That's a true problem. But we've been at periods in history of the United States, and other countries have been in the same boat, where we've had debt to GDP levels well in excess of 100%. Debt to GDP. For example, the post-World War II, we had debt to GDP levels. And we didn't actually, Tim, pay off all the debt. What we did in the subsequent decades was we brought that ratio, that level, down from very high to a much more manageable level. And what we saw is, as we did that, economic growth exploded, because this is what debt does. Debt has a crushing effect. It basically takes money from the private sector and it inhibits growth. And if you inhibit growth, that has pernicious effects on society. It's why we have less children these days, why everything costs more expensive, why the free market is not able to operate as it should be and have a robust, vibrant economy. Debt pulls forward future growth, and it has a deflationary effect, okay, on our system. Not inflationary, deflationary effect. It actually causes growth to be suppressed. That's the crushing effect of debt. So what do we need to do? We need to bring our productivity levels up higher, and we need to bring our debt levels lower. So we return to a ratio that makes sense. Even Hamilton, going back there, he said it wouldn't make sense to have no debt. Having no debt actually is the opposite reaction. It's just not good for the country. We should have some debt, and that debt should be debt which enhances our productive capacity. All debt is not the same. Debt spent on entitlement programs is different than debt spent on the interstate highway system or other technological adventures in the 21st century. So those types of things, I think we have to be more prudent about in how we spend money.
What do you think would be the ideal solution then to get the right ratio of debt to GDP kind of back to where, I guess, what is that right ratio, and how should we get there?
Yeah, it's difficult. And here's the thing. You're asking me how we should do it, and I will tell you that the biggest concern is not actually how we should do it. The biggest concerns I have tend to be, how can you do it in a politically viable way, right? Because there's plenty. I mean, you can go back and read like the Simpson-Bowles Commission as to how to revise some of the entitlement spending programs and how to create a more stable fiscal future for the country. There's a lot of great ideas on how to do this. The question is, what can you do that's politically viable? We'll talk about DOGE for a second, right? I'm all about cutting out government fraud, waste, and abuse. I think that's huge, and that's an easy sort of low-hanging fruit. The problem is that that's not where enough money's at, okay? Even if you were to cut out a lot of these programs, it would be great, again, as a gesture, as signaling to show that the government's trying to be more responsible with your tax dollars. But the reality is, the bulk of the money is going to the entitlement programs, interest on the debt, and military spending. I know that it's very difficult. Even, President Trump seems loath to touch any of the retirement programs. It's very difficult to sort of work on that end. It's also difficult to, spend less in the military. A lot of people are just allergic to that. Any sort of cuts in the military spending, particularly because a lot of those go to military benefits for veterans. It's very difficult to, renegotiate interest on the debt. There's not only so much you can do on that front. So my point in saying all this is that those things are really hard to deal with. Now, to answer your question directly, very simply, what the United States needs to do to try to get back on track, to try to have an effort, we need to figure out a way to reform without, putting millions of people into poverty, without causing some sort of deflationary shock. We need to figure out a way to reduce spending on some of these entitlement programs the government has put in place. If you don't tackle those, then the debt levels just get they just become just out of control and unsustainable. So you have to deal with it in some route. The other option that you can use on the other end, because everybody thinks about how do we cut, right? The reality is to get out of the sort of growing pile of debt that we have, you have to also raise your productivity. You have to also increase the tax dollars coming in. I know people don't want to raise taxes because we're already very much taxed in the United States. However, if you were to increase your productivity, grow the economy, grow that share of the pie, tax rates can remain the same and you're actually bringing in more revenue. So you could handle it on the income side in addition to trying to cut on the spending side. And that's probably your best shot.
How do you think through for yourself owning Bitcoin versus owning a Bitcoin equity like MicroStrategy or any of these others, versus even further out the risk curve, call it, the options market?
Mm-hmm. It's a great question. So here's how I tackle it. I always believe that personal financial decisions have to be tailored to the individual. So if you are a person that's retired, you've built up a great nest egg, and you want to just basically protect what you have, your investment strategies are going to be entirely different from someone like Tim and Joe, who are still pursuing careers, who are still trying to grow their nest eggs, who have decades in front of them to be productive. So from that standpoint, the investment decisions aren't going to look the same. When you ask it in my way, how do I view it? Here's how I view it. In my life where I'm at right now, my stability really is triggered by the fact that I am gainfully employed at my firm, that I have a book of business at my firm, that I can continue to work hard and be productive and pursue side ventures as well. But I can be confident that no matter what happens with my investments that are long-term positions, I don't have to worry about it. Okay, I have lots of investments. If my portfolio takes a massive hit, I can guarantee that my son is still going to have food on the table. He's still going to have shelter. It's not going to really influence my life in the short run very much. It will not be fun if Bitcoin, goes through a prolonged bear market, which I don't think is likely, for years and years, right? That's not going to be fun to watch your investments decline. But for practical purposes, my life is not going to change. That being said, I always allocate in buckets. I say these are going to be my long-term positions. These are going to be my more short-term trades or opportunities. I never trade Bitcoin out of principle because I have a certain emotional attachment that I acknowledge to the asset. So that makes you a bad trader, and that makes you, all about, again, like you said, conquering yourself. I don't want to put myself in a position where my objectivity about the market is compromised because of an emotional attachment to the asset. So I don't trade Bitcoin for that purpose. I have traded other Bitcoin proxies in the past, including options on these things, but my weighting of those relative to my core holdings, my long-term holdings, is very small. So the way I look at it is your primary bucket, your 80% plus, goes in those Bitcoin long-term holds. I don't care what happens, goes up and down, those sorts of things. And I have that for some stocks too that I care about, and indices. And then I also say, okay, because I follow markets very closely and I think that I have at least some ability to capture some alpha there, I do put on positions occasionally. Some work, some don't. But I realize that, like, if you balance it properly, if you risk adjust and you don't get over leverage, you don't need to make money on every trade, right? This is the big miscalculation people make. I can be very profitable and can be more profitable than a holding strategy if I'm right, 6 times out of 10, and I use proper risk management and leverage. So to me, like, I generally try to stay away from Bitcoin-based options because I think Bitcoin's the hardest market in the world to trade. I'd rather option up with other equities or indices or options trades on various different fixed income. Those things have been very easy for me because I think those markets tend to be easier to read. Bitcoin is very challenging. I think it's probably one of the most challenging markets in the world. And to me, like, when I'm looking at MicroStrategy, for example, I'll have a core holding of that, some shares that I think that make sense because I think it's a high volatility play. It's a levered play on Bitcoin, and I expect it to do well as long as Bitcoin does well, and vice versa. But that's not going to be my core holdings. I don't really see any reason to deviate from that. Mostly because I think that there will be a optionality involved with holding spot Bitcoin into the future versus holding an ETF or holding equity in a Bitcoin company or in Bitcoin miners.
Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. What resources do you use that you would recommend to others, whether it's books, technology, just anything, either personally or professionally, that you use as a tool that you might recommend to others?
Well, I try to gain information from a variety of sources. Okay. And that sounds pretty basic and simplistic, but I want to explain a little bit more. I think that there are people that get hooked on one particular medium for absorbing information. Like there are people that I know that are just junkies for podcasts. They just absorb so many hours of podcasts. I know people that are junkies for books, right? They will sit down every night and they'll only read a book. I also think there are people that are junkies for just, going on social media and wafting through all the social media channels. I actually believe that each one of those, for example, has a lot of utility and value. And to me, what I try to synthesize is I try to synthesize all three. I try to read long form books and I try to balance that with shorter form articles and work. But I also listen to podcasts and particularly Twitter Spaces. I think if you are trying to trade markets, the amount of alpha on Twitter Spaces and on X rather in general is amazing, not just for ideas, but for sentiment. I can tell you, like, you can almost feel it scrolling through time frames when the market's overextended to the upside or to the downside. Like when I see this exuberant behavior all over social media, and then I see panic and fear all over social media, I'm like, okay, this has got to be close to a bottom, at least a short-term bottom. And that has been really valuable. And I know for a fact from certain clients, and this isn't a total secret or anything, but there are algorithms out there combing through our social media to try to get a sense for positionings and for buys and to put on trades. I mean, that's not a secret, right? There are high, very, very strong, well-documented algorithms and other trading vehicles out there that are just combing through that huge pile of real-time information to put positions on. And frankly, I think that even if you're not doing that with the high-level analytics, you can gain a lot just by absorbing all of that. So that technology is great. But, we live in a world where I think that sometimes less is more. There's a lot of data, I think, that gets floated around and passed around social media that is just junk. And you kind of need to unpack it yourself, even if it's something using like a GPT, which I think is great and fantastic for doing this, or, just using good old fashioned Google. When someone starts sharing something about, unrealized losses on banks' balance sheets, to try to understand that, you have so much information at your fingertips in Google to realize how that's just complete garbage. Why, when people share those types of charts and why it makes no sense to talk about mark-to-market losses, for example, on held to maturity portfolios on bank balance sheets. They're not ever supposed to sell those securities. They're never supposed to enter. They're supposed to be held to maturity. That's just one example, right? But like people, I think they tend to be sensationalists and grabbing headlines. So it is important to disconnect from that environment, to disconnect from social media. I try to spend time off it, regularly. I failed at that last year, but I try to do it periodically just to reset and just to go back to first principles about, okay, let's figure out what the narrative is and let's try to unpack it to understand it. And there's no real one thing, but there's so much information out there. I mean, I can't imagine how people used to sort of waft through these things before without having the ability to gather limitless information from Fred, the resource from the Federal Reserve. That I love that site. I spend time on there pretty much every other day, just pulling off all the different charts and graphs and data they have. I think it's invaluable.
I thought you meant Kruger, but I guess maybe,
no.
maybe both.
No. Fred is another one. The beauty of this is that even if somebody is not as astute, right? I've been in a lot of rooms with people, and people say, well, why do you talk to this person? Like, they clearly don't know. The DM, I get DMs all the time. Like, why do you waste your time? These people clearly don't have a clue what you're talking about. And my response is always like, look, you have to have the ability as a trial lawyer, right, to communicate up to the highest level, some of the smartest judges in the country, all down to the juror that has a ninth grade education. Some of them, because we do see that quite a bit in Cook County. Like, I'll never forget one time after a trial I had, a juror asked me what the I'm not exaggerating. They asked me what the word because meant,
Okay.
and I looked at him. I said, because, and I actually struggled to try to explain it for a second, because it's one of those questions like if you have to think about it, it's a little different. And then I explained it further, and the juror told me, oh, you mean cuz, like CUZ. They had only had in their frame of mind the word cause. So when I was saying because during the entire opening and during the cross examination, I used the word because. They were totally lost, and that was one of the things where like it made me think like we have so many communication gaps, even in 2025, even with all the technology and all the ability to communicate with one another in real time. I think more mistakes and more confusion happens over our inability to communicate effectively than perhaps anything else. And that's only going to continue in the age of AI. I think we're going to have serious problems just being understood by one another. So if you're ever in a space with me, one of the things I always try to focus in on is, what exactly are we talking about? When people say, yesterday I was in this space and somebody was saying, Europe's about to collapse. I'm like, well, what does that mean? Like, what specifically do you mean when Europe is going to collapse? Do you think the governments are going to collapse? Do you think that the land is going to fall into the ocean? Like, do you think that people will have civil unrest? Do you think the economies are going to go into recession? Let's talk on a wavelength where we understand with common terms exactly what's being communicated. And if you do that, I find that you find a lot more harmony and unity about what's being discussed, and actually a more commonality among viewpoints.
Do you find it easy or challenging to figure out which Twitter spaces are worthwhile for you? Or is it like 30 seconds in, you're like, next? Or, I'm going to stick around for a little bit?
No, it's not really, I don't really make that calculation. Usually it's just schedule permitting, sometimes I jump in where I have time. Occasionally I just don't have time. So I have to leave early or get interrupted. But real-time discussion is important. We have to get back. And again, I'm not perfect, so I don't want to sit on a soapbox and preach on this, but we have to get back to where we can discuss things without devolving into ad hominem attacks, without making it personal. We can agree, to disagree on things. Like, I think that's really valuable, and I think our society has gotten to the point, particularly in the last several years, where what we have is we just have like these bubbles. Right, we have the Bitcoin bubble, or the conservative bubble, or the liberal bubble, or the fintech bubble. And I actually, to your point, to more directly answer your question, I try to vary the bubbles. Like, people literally get mad at me. I got a guy yelling at me in my DMs, like, "Why are you going into this, altcoin space? Why are you talking to these, shitcoiners?" and I'm like, well, because what am I going to do? Just preach to the choir in the Bitcoin rooms all the time? Like, why do you go into the TradFi rooms? Because I have interest in elements of the TradFi market, and I want to talk about Bitcoin. And the ironic thing is that when I go in there, even though I have things to contribute about the TradFi markets, all they want to hear me talk about is Bitcoin, and they try to always goad me into talking about Bitcoin, which I think is interesting, because you get sort of pigeonholed as like that's your only discipline. And as much as I love Bitcoin, right, like I have interest outside of Bitcoin. I do things besides Bitcoin, and that's healthy. Every Bitcoiner that is really passionate about the asset, if you just sit and talk to Bitcoiners all day and you just write off every other person in the world, to me, you're not really helping the cause of Bitcoin adoption. You're not really helping drive people towards an understanding of the asset. You have to be able to engage with them on their level, and you can't just write them off and just say, have fun staying poor, because that is not going to help your cause either if you want to truly get more investment in the asset.
So a few weeks ago, I realized that I could actually download GPT to my phone. It changed my life from just having that experience. And so I guess what I'm wondering is, when's a time that you would use GPT versus Google?
Mm-hmm.
Because I feel like Google, if I just want a quick answer, maybe GPT's like, here's the answer, and it kind of cites, hopefully, obviously one, but maybe hopefully two or three or more sources. But you can't really go, and I guess you'd have to prompt it again to go deeper, whereas Google, you could kind of scroll through and maybe find something targeted, or how do you think about that?
Yeah, no, it's a great question. So I'll just tell you how I operate. Um, if I am looking just for simple answers, or alternatively source material, I'll use Google. I find it to be much better at finding the source material or finding a simple answer. Something basic like, you know, show me, where I can get the Fred chart for debt to GDP. I'm not going to go to GDP. I'm not going to go to GPT for that, because for some reason it often gives me confusing answers or the incorrect source or something like that when I do that. If I want to have a long form discussion, like a back and forth, where I'm going to do multiple prompts, like you said, and really try to dive deep in something, have it test my math or have it test my suppositions. One of the things I use it for all the time is, like if I'm trying to understand a concept, I will push it apart and ask questions in real time, almost like a Socratic method type thing with the GPT. And to be honest, I've been disappointed by some of it occasionally, particularly in the high level stuff. But it's better than nothing, right? It's better than having no one to talk to about this. I was deposing an economist last year, and I read his report, and I had questions about it, just basic things, because I'm not an economist. Okay, I don't have that some of the discipline for some of the financials that they have. So I was trying to figure out the answer to some of my questions based on regularly understood and accepted economic principles that the economists would use to calculate loss of life. And the GPT was really good. It pointed me in the right directions. It answered a couple questions. It told me the limits of its knowledge. It told me to consult other sources. And I went back and forth with it for like an hour and a half, and it was awesome. It is not quite as good as if I would have an actual economist trying to testify on behalf of my client, but it helped me prepare for the deposition for the adverse party's economist. So to that, for that purpose, I love it and it's great. But again, I don't believe in one particular tool. I like to sort of separate it out and try to double check. And that's the reality. The problem we have is this, Tim. The problem we have is that a lot of people are using these generative AI things, and they're using different other tools, and they're just using that tool. They're turning off their brain. And I mean, I think it's horrifying when I read motions filed by pro se litigants that are clearly just filed by GPT, and it's just awful. Like it's misquoting the law, it's from wrong jurisdictions, it's all confused. And when I look at that, I say, I'm not telling you not to use the tool. I just think you need to also check it. You can't just turn off your brain and rely fully on the tool. And what I hope people do, and social media and people I interact with, I hope they refrain from just taking whatever GPT says or whatever any of these generative AI say at face value. You shouldn't. It's not good. It doesn't. It's unreliable. There's too many errors. It has hallucinations, as you say, and until the reliability goes well north of 95, 97%, to me, I wouldn't trust it to do any real heavy level intellectual lifting when it comes to researching and digesting positions.
That makes sense. We might have a few minutes left. Is there anything else that you wanted to touch on, and then just any closing thoughts and where people can find you on the World Wide Web?
Sure. So, I try to occasionally step back and look at big picture where we're at in the market. Mm-hmm. And one of the things that I'm sitting here sort of trying to struggle with, which to me is going to be the story of 2025, is what you can expect from the Trump administration, particularly what you can expect from the Trump administration and a conflict with the Federal Reserve, right? I didn't see it sounded like you were quoting something recent about Trump saying the interest rate should be lowered. Was that something today that came out?
Yep.
Yeah. Okay. So I've said for weeks here, this isn't a recent development, but I've said for weeks, like one of the biggest stories that people have not put enough stock in is this, I think this unstoppable force coming into contact with an immovable object in the form of President-elect Trump and Jerome Powell. What I wonder is, Powell seems resolute that he is not going to leave, even if he's asked to leave, that he's going to finish out his term. He's going to, be concerned with his legacy. And in that dynamic where you have a president who has a convenient target as someone to blame for why anything goes wrong in the economy, how does that end up? How do we, if we do get another bout of, inflation pressures, if the Fed refuses to cut it all this year, which is possible, I expect tremendous political pressure. I expect a lot of, angry tweets back and forth, or maybe just one direction on behalf of the president towards Powell, because Powell's not going to respond. And I expect maybe even the possibility that, and I have a friend online that we were talking about this, that what if, Trump just says, you're gone, Jerome Powell. If he says you are out, and Powell says, no, you don't have authority to do that, and you end up in litigation, literally arguing if the Fed chair can retain his position, because that's where it would end up. To me, that's really fascinating. Will that pass scrutiny? Can a Federal Reserve chair who's appointed by the president, has tremendous power over our markets, and by virtue of the markets, our lives, can he just thumb his nose at the president and say, I'm not leaving, you can't get rid of me? That's a really fascinating question. And I wonder, in that dynamic where you're going to have heightened volatility, not only due to that, but potential issues like trade wars and tariffs and everything else, what does it look like having a Bitcoin market like this? Because the 2017 bull run, you had, I think, some volatility, but it wasn't that kind of volatility. It wasn't to the extent of that. The trade war stuff really started to heat up, if memory serves, into 2018. That's when we really started getting, the China trade headlines, and that was coincident with the Bitcoin decline. Similarly, in 2021, we had this really hot market, and the economy, while it was coming off of COVID, it was still on the back of all that stimulus and money pumping through the economy. So that I think we're in a very different place. Asset prices were not anywhere near where they're at right now, which is all-time highs pretty much across the board in 2017. You got to remember, Tim, in 2016, when Trump was elected at the end of the year, asset prices had gone, at least the stock market, had gone nowhere for a while. It was trending sideways. And then it took off in this massive bull run through 2017. To me, that's really fascinating. Like we're kind of in a different position, and we have a president that loves to support asset prices, and we've got a Federal Reserve chief who is saying, increasingly, we think we're just slightly restrictive, that we're basically at the neutral rate, and is given no indication that he's going to aggressively cut throughout the rest of the year. So all of that is to say, in a long-winded way, I think the real story is going to be a brewing conflict between the Federal Reserve and the Trump administration. And maybe, Tim, we get some desire among the new president, if he really wants to transform our system, to talk about reforming the Federal Reserve Act, which will be an absolute game changer if that does go through. But I don't know. Sorry, the long-winded answer, but that's on my mind these days.
No, that's it's going to be really interesting to watch. Super appreciate your time today, and hope we can do this again here in a little bit.
Yeah, absolutely. Thanks for having me on. If you have a litigated matter, anything involving just general commercial disputes or Bitcoin centric, I have a majority of my practice now is Bitcoin centric. You can reach out to me. Just Google my name and you'll find my website, and you can shoot me an email. And I can, if I don't know how to help you, or I'm unable for some reason, I can definitely point you in the right direction with litigator that's competent in your jurisdiction. And additionally, I'm quite active, as you mentioned, on X. So at Joe Carlasare, if you are interested in my takes on law, the economics, and occasionally on some political issues, feel free to reach out and follow me on X.
Awesome. Thank you so much.
No, thanks for having me on, Tim. Appreciate it.